Luke Downey here, best growth stocks for October 2021. I am super excited because we're about to hit the market green zone, and I'll show you a little bit about that. Historically, those 3 months tend to do really well for markets. And so I think there's a lot of reasons of why that is. But look, markets are basically at all-time highs. Companies are guiding higher, especially technology companies. They have just been absolutely dominating. And we're going to cover 5 that are really awesome. They're on my radar right now. I own a bunch of these, so they're really, really cool. But before we do that, we're going to look at a little bit of data, then we're going to look at some market history before we get into our 5 juicy picks. Hey, I'm Luke Downey. I am co-founder of mapsignals.com. We don't follow the news. We follow the big money. And so a lot of people focus on fundamentals. A lot of people focus on technicals. We do both. And we also look at big money because smart investors tend to go after some really great stocks. So with that out of the way, let's go ahead and look at some data. That's what we do. Hopefully you guys, use data in your process. If you don't, check out our data. All right. That's the story today. So look, we're the big money guys. We are all about juicy stocks, the best stocks out there that have the best fundamental qualities, but we also want to measure what's going on with stocks right now. So we're kind of in the middle of September. September, as I'll show you in a bit, is historically a negative month, but we're starting to see some positive signs. Our big money index, which measures big buying and big selling in stocks, that index is starting to actually go up. That means that there's more buyers stepping in compared to sellers. That in itself is actually pretty bullish. Then you can look under the surface of the big money index, right? And we can see that these blue bars, that's the blue, that's the buying, the red, that's the selling. We're seeing a lot more buying than selling thus far. That is another bullish sign for us. And then let's go ahead and look at ETFs. You see the same type of thing, right? More ETFs are getting bought than getting sold. And why do we look at this? It's because typically when you see these big days of big selling, we tend to be near market lows. When you have big days of big buying, we tend to be near market peaks. You can see it right here. So that's what's really cool about looking at data. So if we kind of just look at everything right now, everything on the surface is actually setting up to be more bullish. So even though we're going through September, it's going to be a little volatile. It's going to move around a little bit, at least historically. But whenever you look at what's going on under the surface, it's not a bad picture. I got to be honest. And now, let's go ahead and look at the green zone, right? Because that's really what got me excited. When I was looking through some of the data over the weekend, we were just looking at, how does September, October, November, December, how do these typically shake out? So we went all the way back to 1990, all the way through 2020. And you can see September historically, it's a negative month. It's a red month. So, if we're down a little bit for September, you know what? That's what it's supposed to do, right? But then something starts to happen. The green zone, right? So if you just, here we've isolated only October, November, December. These are big, big gains. And, look, what happens in October, November, December? Well, Halloween, people get candy, they get excited, at least in the States. Also, Thanksgiving comes in November. And then you also have what people, deal with their end of year stuff, whether it's Christmas, whatever holiday that you celebrate. People are just excited. And so the market green zone is coming. I think there's a really nice bullish setup that's coming for us, for stocks, great stocks. And with that, why don't we go ahead and get into the number 1 growth stock for October. And that is none other than Netflix. All right. Now, full disclosure, I own Netflix and personal managed accounts, but I've owned this thing for a number of years. And if you don't know who Netflix is, on-demand video, if you're sitting at home during the pandemic, you probably know a little bit about Netflix. They've just got a lot of great content, a lot of shows, a lot of new stuff, all that. But what's interesting about the chart, it looks rather choppy, but you can see there has been some buying in these green signals. That's buying that's happening in the stock. Red signals, that's selling, right? Green is good, red is typically bad, unless it's a great stock. But that's just on the 1-year chart. If we go back all the way to 2015, which you really need to look, we can see that there has been a lot of big money buying that's happened in Netflix. And what these blue signals are, that's indicating that Netflix was actually getting bought according to map signals. And then also it was, it's a fundamentally sound stock, right? So if it's got great fundamentals, it means they're growing their sales, growing their earnings, and there's big money coming into the stock. Well, that is just a recipe for some juice. So Netflix is doing a lot of things that I like right now. It's really exciting. But let's go ahead, look under the surface, because we want to know if it's really a fundamentally sound stock. So look, it's a $606 stock. On the left, as a reminder, that's just the big money signals. On the right, those are the top 20 signals. So this is, outlier report. This is just kind of like your technical indicator kind of thing. But, what has Netflix done? Well, it's a $268 billion market cap. In 1 month, it's up 10%. Year to date, it's up 12%. And you can see that year to date, there's been some action, right? It had 1 sell signal and it had 6 buy signals. But how many times was it on that top 20 report since 2015? 30 times. Anything that's been above 20, we consider an outlier, just a cut above the rest. And then you can see that the 3-year earnings growth rate is about 29%. Now, I know a lot of people, they were like worried about Netflix, but I mean, honestly, it's sub $300 billion market cap. I think that stock's got somewhere to be. I think it's ultimately going a lot higher, over the years and over the months. So, and it's starting to see the juice right now. So for that, that's your number 1 stock. Number 2 is none other than PayPal. In full disclosure, I own this one in personal managed accounts as well, but this is just a great stock, right? They're digital payments. They've got Venmo. People, when they want to pay for stuff, they're not using cash. They are using services that PayPal has, like Venmo or PayPal for that matter. But you can see year to date, it's had a lot of big money buying coming into the stock. You can see that with the green. They recently just announced an acquisition for the buy now, pay later. That's been really hot with Wall Street. But, who cares about what happened today? Look at this thing going back to 2015. Man, that is the stairway to heaven. That is a lot of quality buying that's been going into this stock. And I think, if we look under the hood, we're going to see why. It's going to be an easy story for us to understand. But look, it's a financial stock. Share price is $293. Market cap's $344 billion. But look at this. The 3-year earnings growth is just over 36%. I mean, that is just cranking. You know what I mean? And then you see, how many blue signals since 2015, 48 of those. And then year to date, how many, technical buy signals? There were 12. And year to date, the stock's up 25%. 1 month, it's up 5%. I know they just had earnings, a couple weeks ago. They kind of whiffed it a little bit, but sometimes, not all the time, when great companies, when they miss, they guide lower. Sometimes that can be, bullish. That could be a reason to hop on board. Not always, but, when you start to think about outlier stocks, pullbacks sometimes can be opportunities for great companies. So keep that one on your radar. Number 3 is a new company. So this is Upstart Holdings. Full disclosure, I own this one in a managed account. This is a great company, and it's brand new, right? So they've only been trading for a little over 2 years, I believe. But you can see lots of big money came into this stock this year, all that green that's been going in. And if you don't know anything about Upstart, they're about a $20 billion company right now. They are in the loans, the lending. I think they use AI, right? So it's not like your traditional lender or anything. They're definitely using some cool technology. And they just had earnings recently and they just blew it away. I mean, expectations were X and they came up and it was like 30% bigger than X. It was something insane. So that gets me excited. Anytime I'm looking at guidance, with big money, that is stairway to heaven. Obviously, it's a younger stock, right? So if we go all the way back, it looks like they've only been around, only like 6 months, 7 months, 9 months. Let's see if I can go back any further. No, it looks like December. There you go. So this thing has only been around less than a year, but look, it's already been a top 20 6 times. Okay. Do we have an outlier here? I don't know. But what I can tell you is that thing is pretty juicy. I've been liking it. I've liked the story for a little bit. Anytime I see upward guidance like that, I am just get excited, you know. But let's go ahead and look under the hood a little bit. So it's a financial stock, share price 262, market cap's right around 20 billion. In 1 month, this stock is up 91%. That's this little bit right here. Year to date, it's up 544%. If you can believe that. I mean, how many stocks can actually say that? So, I mean, this thing is up there, right? So it's probably due for a pullback maybe. But you know what? Think long term, right? Where's this thing likely going with this type of growth, right? Big money buys year to date, 11 of those bad boys, bad girls. Top 20 since 2015, but really since this past year has had 6 of these. And then the 3-year earnings growth rate is 18%, right? So keep that one on your radar. It's definitely going to be a higher risk profile than some of the other ones that are more, you know, definitely have a longer history. This is a newer name, but I really like, you know, it just reminds me of some of these old school names that used to just blow it out, and, you know, they just had somewhere to be, guys, and that's up. So we'll see what happens with that one. The next one is ASML. And I think people have actually left some comments here wondering if we ever look at ASML. And of course we do. It's all over the research, right? And ASML is this huge semiconductor company. You know, I think they're like $300 billion market cap, something like that, something huge, right? Select semis have just been on fire. And I think ASML might be the strongest one this year. And what's cool about these big money signals is you usually don't just get one, you usually get a bunch of them, right? And this one has just been absolutely insane. But we got to go back all the way to 2015. You start to see a little bit of that stairway to heaven, those blue signals. That just tells you this is a quality stock. So, but you know what we got to do? We got to look under the hood. So let's go ahead and do that real quick. You know the drill. It's a tech stock, share price 861 bucks, market cap 356 billion. 1 month it's up 9%, year to date it's up 77%. And these big money buy signals year to date, no sells, but 16 buys, right? In 2021. That is a lot. And then it's had how many blue signals since 2015? 9. It gives you a little kiss with the yield, so you get like, you know, 0.38%, you know, dividend. Great. 3-year earnings growth, it's just under 22%. I mean, look, if you're looking for growth, you're looking for quality. Look, some of these names, I know they're way up at the top of their range, but, you know, they have just been climbing year after year. And so, you know, every time you see that signal, that just tells you it's been in the research. That's why we want to pay attention. So let's go ahead and get to the final one. And it is none other than Tesla. So full disclosure, I own this one in personal accounts. I bought this one like 7 years ago. It was risky, right? That was back when like Tesla was the most shorted stock or something like that in the world, something insane. But once I got into one of those cars, I knew that this was an amazing, amazing product, and I had to buy the stock. I didn't buy a little, but a little bit did end up turning into a decent chunk. So, you know, kudos for holding that. It was a rough ride, but look, let's talk about this year. It definitely had a bunch of buying that happened earlier in the year. Then they had some selling when growth got sold. Now we're starting to see some green going into the stock. Really like that. And then in terms of the top 20 signals, now remember, there's not a ton of blue signals here, and there's a reason for that. We are looking for big fundamentals, and for a while Tesla was like earning a lot of money, and so for that reason it wasn't showing up on this report. So this is one of those riskier plays that I bought years ago, held on to. It didn't make a lot of money, but I just saw the product and I was like, oh my god, this thing is straight juice. And come to find out, it's one of the coolest companies, right? It's like super innovative. Now you look under the hood, you can really see how great this company really is, right? So it's a discretionary name, share price, 752 bucks, I think, was the last, might be a little, I think it was up today, believe it or not. Market cap, 754 billion. 1 month, it's up 5%. Year to date, it's only up right around 7%. Year to date, we had 7 buy signals, 2 sell signals. So remember, sometimes those sell signals can actually be very bullish, especially if you think it's a quality company. But it's only been 2 times on the top 20 report. And I think that's just because of poor fundamentals for many years. I think that's going to change. Why do I think that? Because revenues have been growing dramatically as well as earnings. So the 3-year earnings growth rate is at 33%. So these are some amazing, amazing growth stocks. And remember, this is not personalized advice. This is really just looking at the process, right? So find great technicals, great fundamentals, and always, always pay attention to the big money. If you guys like this, make sure to like and subscribe to our YouTube channel. I should have said that at the beginning, but I didn't. But I hope you guys really are learning something from these videos, because it's one thing to just show you the stocks. It's another thing to really help you understand how to find some of the best stocks out there, and the big money can do that. I'm Luke Downey, and I'll see you next time. Bye.